President Trump just revealed a deal on that nobody predicted. A market closed for nearly 10 years suddenly reopened. Just when everyone thought Boeing was finished, Boeing made a massive comeback. Here is what was announced and why it terrifies Airbus.
President Trump says China has agreed to buy 200 Boeing jets. The president told Fox News that President Xi Jinping agreed to the order as part of a trade negotiation happening this week in Beijing. Boeing CEO Kelly Ortberg joined President Trump on the trip, but so far neither Boeing nor the White House have commented on the deal. President Trump didn't say which kind of aircraft China would buy. China hasn't placed an order for Boeing planes since 2017.
For years, Airbus completely dominated China's commercial aircraft market. Chinese airlines overwhelmingly chose Airbus A320neo family aircraft for narrow-body requirements. The A330 and A350 captured wide-body orders. Boeing struggled in China following the Boeing 737 MAX disasters beginning in 2019. 2 fatal crashes destroyed Boeing's reputation globally. Chinese regulators were among the first to ground the MAX fleet. Trade tensions between the United States and China further complicated Boeing's position. Tariffs and political disputes affected commercial relationships. Aircraft orders became entangled in broader diplomatic negotiations. Chinese airlines effectively froze Boeing purchases for nearly 7 years. Airbus captured orders that would historically have been split between manufacturers. The competitive balance shifted decisively toward Airbus in the world's fastest-growing aviation market. Many analysts believe Boeing was losing China permanently. Each year without significant orders deepened concerns about Boeing's long-term position. Some industry observers question whether Boeing could ever recover its Chinese market share. The 200 aircraft order signals potential reversal of this trend. Boeing may be returning to one of the world's largest aviation markets. Investors immediately began debating implications for both Boeing and Airbus. The announcement coincides with improving diplomatic relations between Washington and Beijing. Trump and Chinese President Xi Jinping held discussions in May 2026. Aircraft orders frequently accompany high-level diplomatic engagement. Commercial aviation deals serve multiple purposes in U.S.-China relations. They demonstrate improving trade relationships. They provide tangible economic benefits to both nations. They create political momentum for broader agreements. Boeing's 200 aircraft order fits this pattern. The deal signals Chinese willingness to engage with American manufacturers again. It demonstrates that political barriers to Boeing orders are diminishing. For Airbus, the order creates immediate competitive concerns. Airbus spent years becoming China's preferred aircraft supplier. The European manufacturer invested heavily in Chinese relationships, while Boeing struggled. Airbus established final assembly facilities in China. The company developed deep relationships with Chinese airlines and regulators. Airbus positioned itself as the reliable alternative to Boeing. Many analysts believed Airbus had secured long-term dominance in China. Boeing's problems appeared so severe that recovery seemed unlikely. Airbus could plan around continuing Chinese market leadership. The 200 aircraft Boeing order disrupts this narrative. Chinese airlines are diversifying suppliers again. Boeing is competing effectively despite years of crisis. Airbus faces renewed competition in its strongest market. Even though Airbus maintains significant Chinese presence, Boeing's order creates uncertainty. Will Chinese airlines split future orders between manufacturers? Could Boeing recapture market share lost during the crisis years? These questions matter enormously for both manufacturers. China's aviation market is projected to become the world's largest by passenger volume. Dominance in China affects global competitive positioning for decades. The order's composition focuses on Boeing 737 MAX aircraft. This represents particular significance given the MAX's troubled history in China. Chinese regulators were the last major authority to recertify the MAX for passenger service. Chinese airlines operated Boeing 737 aircraft extensively before the MAX disasters. Fleet commonality with Boeing narrowbodies was standard. Pilot training, maintenance infrastructure, and operational procedures centered on Boeing 737s. The MAX grounding disrupted these operations severely. Airlines had to adjust networks, lease different aircraft, and manage fleet shortages. The operational chaos reinforced Chinese carrier caution about Boeing. Ordering 200 new Boeing aircraft, including MAX jets, signals Chinese confidence has been restored. Regulators are comfortable with MAX safety. Airlines are willing to base future planning around Boeing deliveries. This psychological shift matters as much as the physical aircraft order. Boeing needed validation that Chinese customers trust the company again. The order provides exactly that validation. Boeing desperately needed this win after years of negative headlines. The Boeing 737 MAX crisis damaged the company's reputation globally. Production quality issues across multiple programs raised questions about Boeing's manufacturing culture. Delivery delays frustrated airlines worldwide. The Boeing 787 faced extended production pauses. The 777X has been delayed for years. Financial performance deteriorated as revenue from deliveries declined. Investor confidence eroded steadily. Boeing's stock price reflected concerns about the company's ability to recover. Each negative development deepened skepticism about Boeing's future. The China order provides Boeing something powerful: momentum. Major positive news interrupts the negative narrative. Boeing can point to significant accomplishments rather than just problems. The order also demonstrates Boeing's products remain competitive. Despite years of crisis, airlines still choose Boeing aircraft when political barriers are removed. The Boeing 737 MAX wins orders against Airbus A320neo competition. This matters for Boeing's global positioning. If Chinese airlines choose Boeing, airlines in other markets gain confidence. The order validates Boeing's recovery efforts and product competitiveness. However, Boeing stock declined following the announcement, according to FX Leaders reporting. Investors questioned deal details and implementation timelines. The market reaction proved more skeptical than the headline suggested. Stock market response indicates concerns remain about Boeing's execution. Announcing deals differs from delivering aircraft. Investors remember previous Boeing promises that faced implementation challenges. The actual order mechanics remain unclear. Did China sign binding purchase agreements? Are these firm orders or memorandums of understanding? What are delivery schedules? These details determine whether the order represents immediate revenue or aspirational targets. Boeing needs binding commitments with near-term deliveries to improve financial performance. Political dynamics also create uncertainty. US-China relations remain volatile despite current diplomatic engagement. Trade disputes could flare again. Aircraft orders can be delayed, restructured, or canceled. The New York Times coverage emphasized Trump's role in facilitating the deal. Presidential involvement signals high-level political coordination. But it also means orders are partly political rather than purely commercial. Airlines make aircraft purchases based on economic merit and operational requirements. Politically motivated orders may not reflect pure commercial logic. This creates questions about order sustainability. If US-China relations deteriorate, politically driven orders become vulnerable. Airlines might defer deliveries or shift orders back to Airbus. The 200 aircraft commitment's durability depends partly on sustained diplomatic engagement. Despite these uncertainties, the order's immediate impact is substantial. Boeing secures potential revenue from 200 aircraft. Chinese airlines signal willingness to work with Boeing again. Airbus faces renewed competitive pressure in China. The announcement shifts global aviation competitive dynamics. For years, Airbus appeared to be winning decisively. Boeing struggled across multiple dimensions. The future seemed to favor European manufacturers. Boeing's China order challenges this narrative. The American manufacturer is competing effectively again. Political barriers are diminishing. Boeing's products win orders when airlines can choose freely. Airbus cannot assume continued Chinese market dominance. Boeing is fighting back with high-level political support and competitive products. The aviation war between manufacturers is intensifying rather than concluding. The order represents a potential turning point in Boeing's recovery. After years defending against crises, Boeing is advancing. The company is securing major orders, regaining customer confidence, and rebuilding market position.